Can you really turn $100 into $1,000 in just 7 days? Most people say it is impossible, but today I am showing you exactly how to do it. Trading with a small account is a completely different game than trading with millions. You have no room for error and every cent counts. We are going to break this down into 3 phases: finding the right platform, mastering one specific strategy, and sticking to the golden rule of risk. First, you need a broker that allows for high leverage or zero commission trades. If you are paying $5 per trade, your $100 will disappear in fees alone. Look for platforms with tight spreads and instant execution. When we are scalping for small gains, speed is everything. Before we look at a single chart, you have to fix your mindset. This isn't gambling, it is a calculated execution of a plan. If you get emotional after one loss, you will blow this account before Tuesday. You must be a robot. Close the trade when the plan says so. Now, let's talk about the math. Never risk more than 2% of your total account on a single trade. For $100, that is only $2. I know it sounds small, but as your account grows to 200, 500, and finally 1,000, that 2% starts to snowball. We are looking for volatility. We need stocks or assets that move 10 to 20% in a single day. Flat markets are our enemy. The primary strategy we will use is the VWAP breakout. We want to see the price consolidate and then explode above the volume-weighted average price. Combine this with the RSI. When the RSI is below 30, the asset is oversold. This is where we look for a reversal to maximize our entry. Wait for the confirmation candle. Don't jump in early just because you're bored. If the pattern doesn't form, we don't trade. Period. Your stop loss is your best friend. It is better to lose $2 today than to lose your entire $100 and be out of the game. On day 1, our goal is a 25% gain. We want to end the day at $125. It sounds hard, but one good trade does it. The best time to trade is the first hour of the market open. This is when the most volume and volatility occur. Get in, get out, and get on with your day. Overtrading is how small accounts die. Set a limit. If you take 3 trades and you are up for the day, walk away. The market will be there tomorrow. By day 2, we are trading with 125. A similar gain puts us at 160. Do you see the power of compounding starting to work? What if you lose? It is okay. If you follow the 2% rule, a loss only takes you back a tiny bit. Stay disciplined and don't try to win it back immediately. Learn to identify support and resistance. These are the levels where the big money is buying and selling. We want to ride their wave. A price move without volume is a lie. We only enter trades when we see a massive surge in volume confirming the move. No volume, no trade. By Wednesday, if we stay on track, we have doubled our initial investment. This is the danger zone where most people get cocky and double their risk. Don't do it. Keep your risk at 2%. Your dollar amount will naturally increase as the account grows. Stick to the system that got you here. Look for the hammer candle. This long wick shows that sellers tried to push the price down, but buyers stepped in. It is a powerful signal that the price is about to go up. Another one to watch is the bullish engulfing. When a large green candle completely covers the previous red one, it means the bulls have taken full control. Thursday is all about momentum. We are looking for the strongest stocks of the week. At this point, your account should be around $350. Always check the economic calendar. A single news report can send your stock crashing. If there is a major announcement coming, stay on the sidelines. Are you keeping a journal? You must track every trade. This is how you identify your mistakes and refine your strategy over time. Winners journal, losers gamble. It is Friday. If you have been disciplined, you are looking at $500 to $600. The finish line is in sight, but this is the hardest day to stay calm. Don't get greedy. If you hit your target for the day, take your profits and close the laptop. Paper gains aren't real until you hit that sell button. We are day traders. That means we never hold positions overnight. Anything can happen while you are sleeping. Protect your account by closing every trade before the bell. To hit that $1,000 mark, you might need one high-conviction play. This is where all your analysis comes together for one perfect entry. Let's recap. Turning 100 into 1,000 isn't about luck. It is about the discipline to follow the strategy and the patience to wait for the right setup. And there it is, $1,000. You have just 10x'd your initial investment. But remember, this is just the beginning of your trading journey. I have to be honest. Not every week will look like this. Some weeks you will end in the red. The key is to survive the bad weeks so you can thrive in the good ones. Invest in your education. The more you know, the less you have to rely on luck. Read the books, watch the charts, and never stop learning. Now that you have hit 1,000, what is next? Do you take the profit, or do you try to turn that 1,000 into 10,000? Let me know in the comments. If you found this breakdown helpful, hit that subscribe button. We are building a community of disciplined traders who win together. You have the roadmap, you have the strategy. Now it is time to execute. I will see you on the next trade. Happy trading! Let's dive deeper into the indicators. The 9 and 21 exponential moving averages are crucial. When the 9 crosses above the 21, it is a strong buy signal. We look for confluence. That means multiple indicators telling us the same thing. If the EMA crosses and volume is high, your chance of success skyrockets. Advanced traders use level 2 data to see where the big orders are sitting. If you see a massive wall of buy orders, that is a strong floor for the price. You should know exactly where you are getting out before you even get in. Have a target price and a stop-loss price set in your mind and your broker. Don't buy your whole position at once. Scale in, buy a small amount, and if the trade goes your way, add more. This lowers your average risk. Beware of the bull trap. Sometimes the price breaks out just to lure in buyers before crashing back down. This is why we wait for candle confirmation. Aim for a 1-to-3 risk-reward ratio. This means for every dollar you risk, you aim to make 3. With this math, you can be wrong half the time and still be profitable. Remember the golden hour. 9:30 to 10:30 a.m. Eastern is when the volatility is highest. This is your window of opportunity. Use it wisely. Stay away from pump and dump penny stocks. They are easy to buy but impossible to sell when the price crashes. Stick to assets with high daily volume. Trading is a skill like any other. It takes time and practice. Don't be discouraged by a bad day. Every master was once a beginner. Your workspace matters. Clean charts, fast execution, and a reliable internet connection are your tools of the trade. Keep it professional. Never argue with the market. If the price is going down and your indicators say it should go up, the market is right and you are wrong. Adapt or lose. Pick one niche, whether it is crypto, forex, or stocks. Become an expert in that one area. Jack of all trades is a master of none in this game. Leverage can turn 100 into 1,000 quickly, but it can also turn 100 into 0 in seconds. Use it sparingly and only when you have high conviction. Success in trading doesn't happen overnight, but it can happen for you if you put in the work and stay disciplined to the plan we discussed today. And one last thing, take care of your physical health. A tired brain makes bad trades. Sleep well, stay hydrated, and keep your mind sharp for the markets. I am rooting for you. Go out there and make those gains. I will see you in the next one. Bye for now.